What's up, sons? It's Blind Rod with Son of a Tech once again, and I always thought Bitcoin only went up. What's going on? We're going to talk about it right after a word from our sponsor. Today's sponsor is BlockFi. BlockFi provides financial products for crypto investors. Products include high-yield interest accounts, USD loans, and no-fee trading. With BlockFi, there are no hidden fees, just a return of up to 8.6% APY that starts accruing immediately, plus compounding interest every month. Committed to trust and transparency, BlockFi services comply with comprehensive state and federal regulations, and they use Winklevoss's Gemini as their primary custodian, wrapping layers of industry-leading protection around clients' assets. To facilitate this transparency, BlockFi allows me to mention that they are centralized and there is a potential for loss. So as with any investment, do your own research. Personally, I have funded over 4,000 USD equivalent in Bitcoin to my BlockFi account and accrued additional interest on top of my mining rewards. For a limited time, you can earn crypto bonus of up to $250 when you open a new account by visiting the link in the description, blockfi.com/sonofatech. Welcome back. So thanks for sitting through the sponsorship. If you did, if you didn't, thanks for skipping ahead and continuing to watch the video. So yesterday, we did talk about Elon being able to accept Bitcoin now on the Tesla website. We did have some comments in regard to, of course, the bearish signals that are coming along with Bitcoin. And I need to preface this with something very simple. I am not a trader. I focus primarily on mining. When we talk about blockchain in general, I am talking about the technical aspects of it and not trading. It's just not something I do. So I want to make that very clear because there are other channels that do cover trading and reading signals and that sort of thing, and I would point you in that direction. However, I have had some issues actually finding some good ones. So if you guys have any good trading channels to shout out in the comment section, please do. Don't link the entire link to the channel because it'll get blocked that way. Just give me a name and we'll go from there. That aside, what we do have going on is a few different things and components. What's interesting is, of course, the timing of Elon Musk and releasing the ability to buy Teslas at a time right before we have essentially what I understand as $6 billion worth in options set to expire. Now, this is coming from Cointelegraph, and we will talk about it. It says Bitcoin falls to 2-week lows as $6 billion in options set to expire. The expiry date is tomorrow, which is going to be Friday. And here's what we're probably looking at. My understanding is the resistance level would be between 49,500 and 51,500. And if it breaks down beyond that resistance level, we could go as low as 44,000 according to Cointelegraph. And if it doesn't, we should go back up into that $53,000 support zone. Right now, we did break into the 51,000, so it does look like, at least at first glance, that Cointelegraph is basically on point with the pricing. So we're looking at somewhere between $44,000 Bitcoin in USD and something like $53,000 Bitcoin in USD. I did watch a couple of trading channels, one called The Moon, talking about it, and there are people that are putting in shorts as well. It's really up to you if you're into trading. I'm not so much into trading. What I have done is take profits out. I took some out at 61,000. I took some out at about 57, 56,000, and I took some out last night or yesterday around 52 to 53,000 just to make sure I'm protected because this is what I do full time now. So primarily I focus on revenue generating options. One of the things that was super helpful is being able to swap my Bitcoin into a stable coin on BlockFi, which was probably the sponsor for this. And with that, we are still generating an additional 8.6 APY. And then we are also in a stable coin currently over there on BlockFi. So that's just kind of how I'm looking at it. Now, the reason this is happening is because of a $6.1 billion Bitcoin option expiration date on March 26th, like we mentioned. Here's what I wanted you guys to pay attention to is over the past 2 months, the open interest in Bitcoin options increased by 60% to reach 13.5 billion as BTC price rose to all-time highs. The result of Bitcoin's price prediction and the rising options open interest resulted in a potentially historic $6.1 billion expiry set for March 26th. Expiry? I don't know. You guys let me know. So here's what I really wanted you guys to take a look at is most exchanges offer monthly exposures, although a few also hold weekly options for short-term contracts. January 29th, 2020 had the largest expiry date on record as 3.5 billion worth of option contracts expired. This figure represented 36% of all open interest at that time. If you take a look at the price charts during that time, which would be this January 29th, what you'll notice is the volume went up 2 days before, and then it went back down, and the price remained fairly stable across it. So this shouldn't necessarily speak doom and gloom. We will see probably like a drop in volume. If we compare it to right now, the last couple days, you see that we went pretty high up in volume. Once again, we should see what happens tomorrow. My assumption is that it will be around, of course, a drop of, let's see, as far as volume goes, right, we're probably going to drop 10, so 8 to 10, somewhere like that. I don't know. Anyways, looking at it, I'm not too scared, basically, of a huge drop in price. I think we are looking at a stable price, but more than likely, it does look like it will be some sort of bearish trend, I suppose, at least according to everybody that's in the know. So if you guys aren't in the know yet, it looks like a bearish trend. That's actually probably good news, and here's why. So that bearish trend, if that is kind of the path that we're going, and we hit like a bear market right now, and the prices really are going to stabilize between 44,000 and 53,000. That's not a bad place to stabilize, in my opinion, especially for miners. We do have to worry about Ethereum because it's going down harder. It's technically, from what I understand, already in a bear market. We kind of already talked about this before, just from a technical aspect. And that's going to be really in relation to a hard fork with London coming up, EIP 1559, and all the drama surrounding MEV. I'm not surprised as far as that goes. I think it probably hit it a little bit earlier than Bitcoin, and I'm really more concerned about what's going on technically with Ethereum than necessarily what the price of it is. However, of course, being a miner, mining Ethereum, I'm always paying attention to the prices. Like I said, though, I'm not really trading. We do take profits. We put them into stable coins. We did like the strategy like I talked about with BlockFi and making sure that we're generating still some extra revenue. Generating revenue is always going to be more important, in my opinion, than increase in value of the crypto itself. That goes the same with real estate, for example. If you're going to buy real estate, probably better if you can to rent that real estate out and generate revenue on top of it. That's kind of my whole mindset. I'm not trading because trading requires time, and time is something I don't have a lot of, especially trying to keep y'all up to date with everything going on with cryptocurrency. So that's not my focus, right? You have active income, you have passive income. If you're a trader and you are using trading as your active income, that's a viable option as an active income source. My active income source is YouTube and building other projects on top of social media, websites, that sort of thing. My active income is not trading, so I do want to make that very clear for everybody. So if I'm wrong, let me know in the comment section below. This is what I'm understanding. Should you be scared of a huge dive in Bitcoin? Well, always. And that's why I always say, take some profits on the way up, take some profits on the way down, and make sure you're always generating revenue in some form or fashion, whether that be through DeFi options, just as simple as liquidity in, of course, Uniswap, which there's a lot of scary stuff going on there, but we do have V3 coming up, which is pretty cool. And we can talk about that. If you're interested, let me know in the comment section. You have options like BlockFi. However, it is centralized. So, take with that what you will. Don't put everything into BlockFi because it is centralized. You have options on crypto.com where you can kind of do the same thing as BlockFi. There's a ton of different ways to generate revenue with the crypto that you're holding, and you can even do it in stable coins. So something like BlockFi where you can swap in and out at least casually here and there when you start seeing any sort of weird trends and you want to get into a stable coin, that's an option. Plus you get the extra 8.6 versus the 6% if you are in a stable coin versus Bitcoin on BlockFi, which is kind of cool. I just realized I kind of pumped BlockFi, but it was the best example I could think of because I just used it and just did it. So another thing about that is if you guys are interested in the sponsors that I actually use a lot, let me know in the comment section below. Maybe we can do a whole video on that. Thanks for watching. I hope this made some sense and kind of put you at ease for understanding what you should be looking at. I'm still learning. Let's learn together, and I'll see you next Tuesday. If you enjoyed this content, you can check out more crypto content on this playlist up here, or of course, go ahead and subscribe for more in the future. Adios.